Hey everybody, welcome back. Well, we have a lot to go through today, so let's jump right into it. Let's start with the simple stuff. We can obviously see Friday's 1230 level, and then we can see how we acted, the break of that level, the retest and flip and push, and how that level from Friday, that high, is now becoming what? That is becoming support. So it's very clear that we flipped that level, and watching that 660 level right there is definitely going to be important tomorrow. Drop this down to a 5-minute chart and you can actually see how clean this is. Just that break, that test, that retest over and over again. Watch this on a 1 minute and then you can just kind of see how we just rode the lightning all day long and then eventually it just wrapped itself up. Go back to a daily, take that level off and just look. I mean, there's not really much to say here, guys. What you're seeing over and over here is wicks. Down, down, down. And what's that telling us? Wicks are what? Wicks are price rejection. So that's what we're seeing over and over again, and there's not much more to say about it. We're waiting for some kind of pullback. Everybody's been waiting for this pullback. We have this breakout, the rally, and then the drop. What's interesting about this whole level is if you measure this off, and we'll do it on a 15-minute, and watch this with fib levels, because I think this is really important to just kind of get a sense of what's going on here. So you can see our levels right here. Now take a look at this. It's crazy, and I love this kind of stuff, specifically when you can see where we're at with key levels just off human behavior. So this is Tuesday, and you can just see right there that break at 8:30 on Tuesday the 5th, right into the election, and then obviously the rally right there after, and then you see the push. But taking that data point right there and overlaying fibs, I put a 50 in here, even though it's not a fib level, just to watch the battle that goes on between the buyers and sellers from those levels. But look how you held that 38.2 right in here. Look how you've been rallying right in there at that 78.6. It's pretty insane how those levels are just holding 61.8. It's over and over again. So I think it's important to just note this now that the measured move on it takes you up to here, and obviously 62, 62, but I thought it was pretty fascinating how these levels are holding. And again, you're just having a lot of super technical trading right now. We're even seeing that after hours in some of these names that are continuing to push after hours, and some are breaking down like Tesla. We'll talk about that and why that's happening. But we are seeing some movement, and I do think it's important for us to discuss this, because when we see these, we want to pay attention to them. So what do we really see here? Really, that 6,000 level seems to be pretty solid at this point, and it's going to be hard for us to break that, quite frankly, I think. I don't know that we're going to see that unless we have something crazy Friday with non-farm payrolls. Take a look at the NASDAQ here. Now, if we look at the NASDAQ, we're not over that higher high. This I find absolutely fascinating when we dig into this, because here's that July 11th level, and since then, you've just been battling and battling. Now you're trying to get over that new level, that 21, right? That 21.2, it looks like right up there. We'll drill into this in a second. We'll just drop this line right here, and then we'll go from there. But watch when we drop this down to a 15. So one of the easiest things to do is just look at this at a 15-minute, and you can see those levels really clearly. If you break here, you're heading down here pretty quickly. Now, I don't know that you are going to break. You are seeing a lot of diversification out there today, lots of rotation and lots of volatility. And we should probably talk about the volatility in a little bit, but I don't think you can miss this kind of stuff. Watch when we drop this down to a 5-minute chart, and you can just kind of see how we're riding that level. Try to get over, falls, rallies, fails, 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 again and again and again, but you're not making the lower lows. And I think that that's what's frustrating for people out there. They're waiting for these breaks. They're waiting for a big breakdown. You're not getting it. You keep waiting for it, and we're waiting for it, but we're not seeing it. They had some earnings after hours that weren't great in the software space. We'll get to that, but this is what you're dealing with now. So you have a lot of battling going on up here. Drop this down to a 5, and watch what happens when we clean all this off, and then we just drop fib levels at the same exact location. Let's do it on a 15 so that you can say it, because it's absolutely crazy how accurate this is. So what we're doing here is we're dropping fib levels, and we drop them on exactly on this 15-minute chart on the 8:30 bar on that Tuesday of the election, right to the peak. And what you're seeing is, look at this 23.6 and how that's holding right there. It's really fascinating to me. The 50 I like as a demarcation line. Just do I have net sellers or net buyers? And you can see that we have the majority of time, if you broke up the chart from when it rallied on the way down, meaning from the peak over, have you had net sellers or have you had net buyers from that 50% line since that date? You've had net buyers. It's pretty clear. You have this section in here, but you have net buyers. So look at these levels like 61.8, how you've just been botting around in there. Look, I mean, it's kind of crazy to me how accurate these fib levels are. So usually it's not this technical. It's not this accurate. For whatever reason, I do this pretty much every day, and I just overlay and take a look at where we're at and see if it's fitting, and it pretty much is. So I would continue to look at these levels. There's other things that you can note here as well. I'll give you an example. In front of you is the volume profile. So from the 5th over, from that date over, when we just absolutely ripped all the way up, and then you're just sitting there, right? But what's happening during this period of time is that VWAP is actually moving, well, actually point of control is actually moving higher. I was going to say VWAP as well, it is. But the point of control is really what I want to focus on here, not the VWAP. Look how it's building here. So you're building a wall up here. Now this is good and it's bad. It's good if you break out. If you start breaking below this level, you could have a problem because you have nothing but air under here. So you really want to be careful of this level and watch how it acts. And that level is 21,187, and you can see it right there. But what you'll see is you'll see that VWAP, or rather you'll see that point of control move around. Now I'll show you a really interesting trick that you can do for yourself, and you can do this on names as well. See how we have it from this specific point? You can take it down and break it out by sessions. Let me show you. So if you break it out by sections, you're going to get the value high, the value low, and the point of control. What's fascinating is you can actually watch this as like a stair stepper and see how it's going. For me, just looking at the value low, as long as you're going up and those value low areas are like stairs and they're heading higher, you're fine. You start seeing a drop. You might want to be a little concerned, but you're followed up with what? These just big jumps. And we saw it today. I mean, it was kind of crazy how fast we just exploded to the upside here. And once we saw that, it was on. And that's exactly really what you're looking for here. So you can always break this down and see where that point of control is, where the smaller one is, and where that value high is. But overall, it all ties right into the same spot, which is kind of interesting. The question really here is what's going to be our driving force for the NQ? I've got some concerns about that. I'll show you. So the question really is who's going to lead us and where is that coming from? So here's the SOX. I have maybe an answer to this, but here's the SOX, and you can see this pretty clearly, but I'm going to drop a level. Left, head, right. Pretty big neckline. You can see we broke it, but not since you've had this left shoulder and right shoulder. Now, the largest problem with is it's the shoulder, meaning if the shoulder's lower than the left, it's usually not as bad when you break. But the higher that you are over the left shoulder, which you're not, you're actually lined up perfectly here, but the higher you are, the bigger the drop. Now the question is, are you going to drop here or not? I'm not trying to get into that tonight. What I'm saying is here's the 55, the 22, and the 12. You should use what you're comfortable with. But we can't say that this is leading us, right? That wouldn't be a fair assessment. What we could say is that over the past hour on an hourly chart, it didn't go down. I mean, that's really the best thing that you could say is that, well, from Wednesday, we haven't taken out a new low. That's not really a ringing endorsement here, right? Considering what you're looking at, and I'll show you what I mean by this. When we drop into this and look at this on an hourly, what do you really have? You have this DTL. DTL stands for downward trend line. So, and when you drop it here, you're just going to get these what? Lower highs. And so you're going, okay, well, we have that. So is that really leading us? Let's go to the RSI for a second and go, well, the RSI is actually already overbought on the SOX. So that's not really a driving force. So then I start wondering, okay, well, what else could be driving us? Now remember, SMH is 2x NVIDIA. So this one is going to be doing a little bit better because NVIDIA is holding in there, but NVIDIA faded today, didn't it, a little bit? So follow the line of thinking here so you can understand where I'm going. What is going to be the driver for the NASDAQ? So then you go, well, it's going to be the IGV name, okay? Because IGV's been the driver. It really has. Those software names, right? We've seen this continue to lead. And then we're starting to see stuff like this, where here's a high, here's a low. So I have a negative divergence now on the IGV names, and we're starting to lose them. And we're not losing them very nicely. And let me show you what I mean by that. And this is an issue. See, if we don't have the software names, like the Oracles of the world, and then we were watching this today too, and we were watching this in the community, and I'll just point it out. Here's crowd. And now it looks like a very simple doji, and you can see where we are with the RSI, but watch. But wait, there's more. And I'm doing this one pretty informal tonight, guys, because at the time of recording this, I'm still out there actively reading the news, still trading, still trying to get this done. So bear with me, a lot going on. You see where you're at right here, that doji? Out of nowhere, you just cracked. So you don't really have a lot. We could argue that, oh, well, we got to this open. You know, and if you always look for a reason, you're going to find one. But really, we're going to go back to the Thursday level and say that's the reason that we rejected, really. You know, it's kind of a stretch, but it's there, right? So when we start looking for reasons, we'll always find one. But okay, let's say that that is the reason. Now what? Nevertheless, this rejected. Look how fast we rejected off it from 145 on, 354 to 346. I mean, it was not a quick, like, oh, we're going to bounce and then go higher. It was consistent selling into the end of the day. And we know what happens there, don't we? We know who's selling at the end of the day. So we're going to go through the last hour probably on Saturday and start digging into the last hour of trading and seeing what's going on there. But what I really want you to take away from this, what I think is really important for people to get here more than anything, is I don't have a leading sector. Now we could say, oh, well, you have block. Now, did block lead today? Not really, no. Now, when we look at this, we don't really have a leader. This is where I think it's going, and this is where I think it gets interesting. In front of you is PSCT, and this is the Small Cap Information Technology ETF. Now, I'm going to show you what it's done since the 18th and look at the value there. Now, you can go through what these names are. It doesn't really matter. But what it does matter is this. You're broadening out, and you're broadening out not into the large cap names. Now, if we take a look here, this is IGV divided by PSCT. And I think that this is pretty neat. So if we drop the line here, you'll see what started happening after Tuesday. IGV names, PSCT. Smaller caps are starting to lead, and we're starting to see this, right? This is exactly what we're looking for. We're starting to see the smaller caps take advantage, and they're getting an interest. Now, if we take a look at the IWM, we're seeing that up here. But that doesn't mean you just need to look at the IWM. The question becomes, can the underlying stocks of the NASDAQ that are not really sector names keep us higher? And the question is, maybe for a period of time. But you're going to need the follow through. You're going to need something like Meta by itself having a good day or Netflix having a good day. Those portions can help us, right? They can help lift the XLC up, which is what we're seeing. They're driving, right? Like that's hitting highs. You're seeing the XLK. That's driving a little bit. We're seeing these big moves in Microsoft. But these moves have come and gone, and then they just fade away again, right? We don't know how long they're going to be here for. And I thought this was interesting. When you look at FNGU today, all we did was hit a level and stop. Let me show you what I mean by that. All we did was literally push for like 40 minutes, and then you just shut down for the rest of the day. And you did that everywhere. Even on Tesla today, which is wrestling right now with that opening price, all you did, I don't even need a 15-minute chart for you to see this. Look at this on a 5-minute chart. All you did was bid up, trap, and then you went from there. And then from that trap, you just played with everybody all day. You held the lows, and then you went and you couldn't take out the highs. Now, after hours, he did not get his pay package in Delaware again. It's interesting. I haven't gotten into all the news, but I do believe that they are now in Austin, Texas, which I believe they will just refile for, and it'll go from there. But after hours, you're down about $5, probably a buying opportunity, considering you're sitting here right at that opening price and unable to break it. If you take a look at this, might as well get into it while we're here. You broke, and then they basically just flushed, went from there, got everybody involved, and ripped. You're seeing more and more of this kind of behavior, guys, and this might be a good time for me to point this out. You need to take a look at what you're doing. Now, I got into this in the community a little bit, so I'm just going to explain it to people. People are seeing this volatility, and they're saying, oh boy, the market's volatile. There was a reason why you didn't always have your portfolio in technology names, and it was because they were volatile. And that's why you would buy the Procter & Gamble's of the world. It's why you'd buy the Colgates of the world, okay? And then all of a sudden, people were like, well, why would I buy Clorox if Microsoft just goes up every day? Because Microsoft doesn't go up every day. It's volatile. And that's volatility is what you're dealing with. This is why people didn't always just buy tech, because the volatility was something they couldn't handle or didn't want to handle with their entire net worth in the market. This is really important to understand because a lot of people aren't getting this. What I'm seeing, and I'll give you a really great example of this. So here's Tesla. Now, if we do something as simple with Tesla and take a look at the ATR, and again, if you're in the community, you already know this, but we're just going to run through it real quick for everybody else. And we take a line and we say, okay, well, let's take a look at November 5th. And you can see that right here and drop a line. Now, if we drop that line over on the 5th, one thing we'll note is that the ATR, which is the average true range, is up. So if we take this level right here, which was 19 at the peak, and we take here and we want to measure that out, let's just say it's 15. And then you came here and you measured from here down to here, and let's just say that's about a 10. It's actually way more than this, but just giving you an example. You have a 33% increase in volatility. So if you're going out there and using the stops that you were using back here when the ATR was there at like $9, and now your average true range is 18, which is 2x. See what I mean by saying only 30%, it's actually more. So you have 2x the volatility and you're still using the same levels of stops you were using before. This is why a lot of people, when they look at the turtle traders, what they never really understood about it, why it worked so well, was they used volatility stops. I could do a whole video just on it. It's really smart, actually. But what this is telling you is that, look, if you can't handle this, then don't do it. Here's a great example. Like if you're out there trading this and you're trading Tesla today and you look there and go, okay, well, $2 is on a 5-minute bar. Now, what this will tell you is that where you have a 67% chance of being within that period of time, right? So yeah, you're dropping down to like $1 at the end of the day. But at the beginning of the day, if you're trading this and you're trying to use like $1 stop, $1.50 stop, you just might as well write a check to St. Jude's. You're going to get crushed. Now, this is very different. You will see these peaks over time. But if you go back to this level, look over here at what you're saying. Okay, you had 50-cent moves in 5-minute bars, right? It's very, very different than what you're getting here. And this is what I mean when I was saying, yeah, I'm saying 30% on average, but it's really 2-3x intraday movement that you're seeing. So this is one of the reasons why your option trades aren't working the way that they once were. You're not as smart. It has nothing to do with that. The increased volatility is doing it, and that's what's whacking you around, and that's why your options are more expensive. But they're not pricing it in, because when you look at the VIX, which we'll get to, we'll get into it. What you need to understand is everything's changed. The level of volatility that you're going to expect in the market right now is going to increase greatly. If you don't get that, you're going to get slapped around the market. And there's really no other real nice way to say it. So just understand that. Do yourself a favor. I have my own measurements for ATR. You might know them. I've done them before. I'm not going to get into it all now. You just use regular ATR. Understand that's why you're seeing the moves that you are. This is why when people are looking at MSTR and they're buying puts and calls right now, specifically calls, and it's moving, they can't figure out why they're not making money, why it's not going the same way. Well, you had a 15 ATR back here, then you have mean tweets getting elected, and then bam, now you have a 53 ATR, right? Go look at this intraday if you want to like wrap your noodle around this. All of a sudden, every bar is $5. And you start taking a look at this and go, well, wait a minute, wasn't it always like that? And you go back and take a look at it and go, no, it wasn't. It was nothing to have like a day where it was like $1.30 or $1.40 for something. You'll say, well, that's because of price. Even if you doubled the price, that would put it at $3. It's got nothing to just, well, you want to look at price because it just has something to do with it, but it's not even close to where you're at now, let alone when you're at one of these peaks, right? So when you start looking at that, that's why you're getting stopped out of your trade so much. For those that don't understand why they're getting stopped out, you're looking at it. What will start to happen as that ATR starts to drop, it'll start evening itself out to some kind of level. And that's when buying options again makes a lot more sense. This is why a lot of people think that the market is going to come in when it's not, because they're looking at these movements and saying, oh, this volatility is telling us we're going to fall off a cliff. All you have to do is look at the VIX. Does anyone look concerned? Is anybody panicked? Does anyone look like they're scared? The VIX took out a low today. So it's not that. It's the fact that the volatility of the entire market has changed. And that is a good thing for traders. But if you don't know that it's changed, that's where the problem lies in. So you have to be really cognizant of that. Now, there's a couple of things that we should really go over so that we're on the same page here. As far as Zscaler, this I thought was okay. But I don't really like what they did here, and I can tell you right now, no one's going to like what they did here. So what they did was they came out and said, yep, yeah, these are our earnings, this is our growth. Everyone's like, well, it's fine. I don't understand why it's down. Oh, by the way, the CFO's leaving. And as soon as that hit, that was it. And since then, you can just see how this stock's been acting. So that's not going well at all, obviously, and that you're going to see some weakness in the IGV names probably on that tomorrow. I do think that it's probably overdone, just like I think that Tesla's a little overdone, and I would watch this. I take a look at that. After hours, you're seeing this SMCI continue. Does it go higher? Does it go lower? We'll find out. We'll see tomorrow. We'll see what it does. I will say this, the fact that you got all the way back up here and the way that this thing is acting is pretty interesting. So this might be something overnight that does get some action, and it does come in tomorrow and squeeze again. My opinion of this in this letter, not that anybody asked, but I'm going to give it anyway, that they investigated themselves again, and they themselves, with this special committee of one person, found that they have not done anything wrong. I would spend time and read that letter. I'm not going to go through it for time's sake, but it's kind of silly that they even issued this statement. I personally think if you're a technical trader, it might not even matter, because by the time you come in tomorrow, everybody reads this, everyone says, well, there's no wrongdoing, and the stock's up $10, they get back involved, and this thing can probably gap fill to 48, 49. I'm just going to be blunt. I have a short position on. Maybe it works, maybe it doesn't. it is what it is. But when I see this kind of stuff, you kind of have to laugh at it. Like when we investigate ourselves and we found no wrongdoing, it's kind of silly. Nevertheless, it's holding. And maybe, maybe somebody picks it up and it goes from there. Maybe it's enough to hold the NASDAQ off. I really don't know, but we'll see how that plays out. Now, the big date that you're going to have for the market that you have to watch is just Friday and non-farm payroll. But we'll go over some of that tomorrow in the pre-market public live. That is it